Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China's imports of copper concentrate from the United States hit their highest in June since September 2018, customs data showed on Sunday, as smelters made the most of a trade détente to purchase tariff-free metal earlier this year. China, the world's top copper consumer, imported 30,734 tons of U.S. copper concentrate last month, according to the General Administration of Customs. That accounted for 1.93% of its total June copper concentrate imports of 1.59 million tons. The intensifying China-U.S. tensions had squeezed copper concentrate imports to China since late 2018, although Chinese firms had been allowed to apply for exemption on tariffs since March, with at least 2 cargoes of copper concentrate from the United States due to arrive in mid-June.
Moving on to the top news in the energy sector.
Poland's biggest coal producer, state-run PGG, is likely to announce within days deep cuts in coal output and the closure of a number of mines as part of a restructuring plan that is expected to prompt protests by miners, industry sources said. Poland generates almost 80% of electricity from coal and is the only member of the European Union that has not pledged to become carbon neutral by 2050. PGG's management will meet with trade union representatives on Tuesday to present the restructuring plan. The proposal will include closing a few mines and keeping only the most efficient ones open and reducing salaries, 2 sources familiar with the situation said. One source said that as a result PGG annual output would be reduced by much more than 10% but not as much as by half. Another person said the goal might be to phase out coal mines in the Silesia coal region completely by 2036.
We will now look at the top news in the agricultural sector.
ICA, one of the leading agriculture consultancies in Moscow, said on Monday that it had raised its forecast for Russia's 2020 wheat crop to 78 million tons, from the previously expected 76.5 million tons, due to high yields in some regions. Russia, the world's second-largest wheat exporter after the European Union, is harvesting its crop after dry weather in its south, where the main grain-producing and exporting regions are located. However, yields are improving in the central regions.
Next we have agricultural price moves.
Chicago soybean futures were marginally higher on Monday as strong recent sales of U.S. supplies to China were largely offset by concern about growing tensions between the two countries. The most active soybean contract on the Chicago Board of Trade rose 0.05% to $8.99 minus 3/4 a bushel by 10:12 GMT, while corn was up 0.3% at $3.36 a bushel. China has agreed to import $36.5 billion in U.S. agricultural goods in the first year of its Phase 1 trade deal. Wheat fell 1.3% to $5.32 minus 1/2 a bushel, giving up the bulk of the prior session's gains.
We will now take a look at energy price moves.
Oil prices edged higher on Monday, helped by a weak dollar and expected U.S. stimulus measures, but gains were capped by rising global coronavirus cases and tensions between the United States and China. Brent crude rose 32 cents, or 0.7%, to $43.66 a barrel by 12:05 GMT, while U.S. West Texas Intermediate crude was up to $41.62 a barrel or 33 cents. The U.S. dollar index reached its lowest since September 2018, hurt by deteriorating U.S.-China relations and domestic economic concerns, as coronavirus infections showed no sign of slowing.
Moving on to metal price moves.
Copper prices ticked up on Monday, driven by a weaker dollar and expectations of a global demand recovery, but uncertainty about consumption in top consumer China capped gains. Benchmark copper on the London Metal Exchange traded up 0.1% at $6,420 a ton in official rings. Prices of the metal, which is used as a gauge of economic health by investors, are up nearly 50% since hitting four-year lows in March when markets tried to price in the demand impact of COVID-19 lockdowns. Aluminium was little changed at $1,700.50 a ton. Zinc rose 0.1% to $2,220. Lead slipped 0.3% to $1,813.
Finally, we have the most recent news on the financial market.
The dollar steadied early on Monday after reaching its lowest since September 2018 overnight, weakened by deteriorating U.S.-China relations and domestic economic concerns as U.S. COVID-19 infections showed no sign of slowing. U.S. Secretary of State Mike Pompeo said Washington and its allies must use more creative and assertive ways to make the Chinese Communist Party change its ways. With domestic economic concerns trumping its role as a safe haven currency, the dollar index fell overnight before steadying in early London trading. At 0736 GMT, the dollar index was at 94.054, down 0.3% on the day. Safe haven currencies were up against the dollar. The Japanese yen traded at a 4-month high versus the dollar, at 105.575. The Swiss franc was up around 0.2% at 0.91855, having reaching a 5-year high of 0.9167 overnight. The euro hit a high of $1.17255 versus the dollar overnight, its strongest since September 2018, but slipped back below $1.17 in early London trading. That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.